Hello and welcome back to another episode of Palisade Radio. This is Colin Cattell. With us today is Keith Neumeyer, CEO of First Majestic Silver. Keith, thank you for joining us.
Well, thanks, Colin. I appreciate your time.
I just got back from a very informative weekend attending a conference in Cancun, and one of the speakers at the event was Tim Price. And I guess that you know Tim quite well. During the presentation, Tim put a bar chart comparing the combined value of all major gold and silver producers listed in the U.S., and then compared that to Microsoft, Apple, and a couple other companies. And what was shocking, and you're probably well aware, is that the combined value of all these miners is something like 1/3 the market cap of Apple. Keith, how does an entire sector that is really so important to the world commerce get such insignificant attention right now?
Well, it's very much similar to what we experienced, during the dot-com boom in the late 90s and early 2000, when the resource sector, from 98 to 2002 was just completely an unloved sector, and the money was flowing into, the best, or the latest high-tech story of the day, and people were making money and forgetting about really what it takes to build these computers and build all this technology that makes their life so wonderful. And then when there was a crack in the system, the NASDAQ crashed, and everyone woke up and said, geez, we've been ignoring this very undervalued sector. We got to start investing in it. And then all this money started rushing into the resource sector, and we all know what happened, a 10-year bull market on resources. And now it's almost a mirror image of what occurred then is what's occurring today. So I'm not sure what's going to change it. We're seeing ridiculous valuations right now, and in the case of First Majestic Silver, we had a market cap of $3 billion back in 2011 when we produced only 7 million ounces of silver, and today this year we'll produce over 15 million ounces of silver, over twice the size of what we were back in 2011, and our market cap is somewhere around $700 million, and it doesn't make any sense, but that's just where we are.
Well, I haven't been around long enough to witness a mining or metals, call it hysteria, like what probably happened 20 or 30 years ago when gold topped out around $800 an ounce. But do you see something like what happened in the tech bubble, where anything with a .com name that was publicly listed was trading at ridiculous levels? Do you foresee something like that happening in the mining sector? Obviously, there's a long way to go here. We could just have a very strong bull market, but we could also have something parabolic occur with a blow-off. What do you think on that?
Well, I can tell you we're a long ways away from such an event ever occurring. Some people, called gold at 1900 a bubble. Some people called silver, at $49 a bubble, and it's funny how they can identify bubbles in the metal sector when they had problems identifying bubbles in the real estate or the bubbles in the high-tech sector, which I think we're currently seeing, bubbles in the S&P, bubbles in the Dow, the Hong Kong exchange, the German exchange. All these markets are just trading at ridiculous valuations, all-time highs, and the markets just continually go up and up and up as the mining sector just, continually drifts lower. I would contend that we're seeing bubbles everywhere else other than mining. If that is it going to flip the other way? I suppose it does. Human nature always chases things that are moving, and it's always hard to buy when things are depressed, as the mining sector is, and it's always easy to buy things at the top of the market, like we're seeing in the S&P, for example.
Keith, you touched on this a bit already, but I want to talk about the benefit of a bear market, a point that Rick Rule has discussed a few times on our show. A bear market eliminates many of the poorly run companies and ultimately flushes the system out, creating a much healthier industry on the other side. This is a very easy argument to understand, but I want to know your personal experience with just one company, being First Majestic. As you mentioned, the stock was at a $3 billion market cap. It's now around $500 million. The restrictions on capital and low silver prices have likely caused you to make some changes on the business plan the last few years. Do you see Rick Rule's argument applying here? Is First Majestic going to emerge from this bear market stronger than it went in?
Well, for many reasons. That's a long answer. I'd have to probably speak for the next 30 minutes to actually answer it thoroughly as I would like to. But Let me try to break it down as best I can. The mining sector experienced high inflation as a result of all the inputs that go into our costs, and a lot of those inputs are people. In the mining sector, there's not a large skill set to fall back on. Most younger people get educated in law or accounting or technology or whatever it may be. There's the education of young people in the mining and engineering sector, geology and engineering, is quite low. So there's this huge age gap, which caused a lot of inflation in the business. When mining companies experienced high metal prices, we were being forced to, not so much forced, but we wanted to expand our business so that we could obviously create more earnings for our shareholders. So that created this huge stress within the industry, not only the manufacturing of underground equipment, through companies like Sandvik and Caterpillar, where they, they didn't have the capacities to build equipment as quickly as the mining sector needed it, to shortage of manpower, to high oil costs, which caused much higher chemical costs. As you know, most chemicals come from as a derivative of the oil industry. So there was costs all over the place that were inflating very quickly, and so no one expected the metals to drop the way they did. So mining sector had to then start cutting all these costs, and inputs have been dropping, but the costs couldn't drop as quickly as the metal prices were dropping. Therefore, a lot of mining companies were producing metal for a period of time and actually at a loss. Now, in our case, First Majestic case, we went through that period. It went through for about 3 or 4 quarters where we were actually producing metal at a loss, and it was an unfortunate thing that no one anticipated. But we had to change our business, and fortunately, we're very deep. We've got a very large, very skilled management team. We were able to lay off well over 1,000 workers. We were able to bring a lot of the businesses that we were outsourcing before in-house because we had the skill sets in-house to be able to manage that. And of course, costs were dropping, input costs were dropping at the same time. So we were able to turn the ship, and we now today produce metal at a profit, even though silver is at these ridiculously low prices. Whereas other companies that aren't as flexible, and in a lot of cases, these companies that have one mine, for example, they use contract workers. They don't have the depth in management. They don't have the skill sets in place to make the major changes that's required. Those companies still today are producing metal at a loss. In other words, they're producing metal at a higher price than what silver is currently trading at. And that's a problem. They're burning cash, and they're burning cash quicker than they could raise cash, because you can't. The market's shut. You can't raise capital to keep these businesses alive. So, in some of these situations, you will see, as Rick Rule pointed out, that they may have to shut down their businesses. Now, what that means, we can speculate, but from an M&A point of view, First Majestic is extremely active, trying to take advantage of some of these situations whereby you've got junior mining companies that are just out of capital. These are explorers primarily that we're spending a lot of time looking at, that have interesting portfolios of projects that they just can't afford to keep. And then you've got the other single asset producers that are producing metal, but yet they're producing at a loss. And we're also looking at that space as well.
On that same point, I assume you saw Newmont's earnings last week, and I think that they might prove to be a very significant sign. I've heard from some folks that have been in the business for many cycles that oftentimes you emerge from a bear market when some of the majors are able to rein in their costs and start to show a profit even though the price of the metals are lower. What do you see happening? I mean, this is kind of on the same point we were just discussing, but how significant is Newmont's earnings that just came out?
Well, it's still early. What's going on right now is the majors are in asset selling mode, which is interesting. Majors often sell at the bottom and buy at the top. It seems to be a common theme for them. Then you've got the mid tiers like First Majestic, who are still in balance sheet repair mode. Some are healthier than others, and unfortunately, we were able to raise $30 million a couple of weeks ago through Bank of Montreal and a bought deal financing at $6.50 a share. It wasn't the greatest price, considering where we came from, but the money was available to us, and we took it, and it really was able to shore up our balance sheet and reduce the risk to our shareholders that we may run into some kind of financial difficulties in the future if metal prices stayed where they are. And so I thought it was a necessary thing to do. But the mid-tier sector as a whole is still in as I say, balance sheet repair mode. So I think it's still going to be some time away before you see the mid-tiers really start getting aggressive on the M&A side of things. Then you've got the small guys that are just completely in very desperate situations where there's just no money available to them at all. And so it's interesting. We are in the bottoming part of this phase, and for those sophisticated shareholders, or investors, pardon me, they really need to look at good management teams and good assets and good jurisdiction.
On the point of being at or near the bottom of this bear market, a close friend of mine at thedailygold.com puts together this bear analog chart whereby he's plotted today's bear market in the junior sector against the bear markets of the past 80 years. And so you're able to compare in price and time just how bad the current situation is. And it looks as if in the realm of time, we're at the second worst, only second to 1996 to 2000. So it's hard to imagine that things could get much worse. Silver's at $15 and gold's at $1,200. What is your outlook without trying to guess and make a prediction?
Well, just talking purely about metal prices, copper's at $350, silver's 16, gold, as you say, is $1,200. These aren't really that bad prices. If you compare these prices to 10 years ago, this is fantastic. I love these prices, but the problem is all the inputs got expensive. So now all the inputs are dropping, and now we can produce metal at a profit, even though metal prices are lower than what they were 3 or 4 years ago. So it's not that bad of a situation at the current metal prices, but when things do change because supplies are dwindling and demand is still very much there. Demand for silver, demand for gold, demand for lead, zinc is very much there. The headlines, talk about world recessions and so on and so forth, but quite honestly, it's a bunch of nonsense. We're actually in supply constraints in most metals, and when the street wakes up, and this is all psychology because we don't have a market in the world, that actually is priced on supply demand, and price discovery is based on the view, or it's based on how humans feel about things, and one day people will wake up and realize that, hey, this sector should be bought. They should be investing in metals, and when that happens, the base that we're starting from is going to be a lot higher than the base that we started from 10 years ago. So rather than starting at $250 gold, that took it to $1,900. We're going to be starting at $1,200 gold. It's going to take it to some ridiculous number, and the same goes with silver. The same goes with copper, and so on and so forth. So, I'm certain it'll happen. Time frames are somewhat argumentative. We can argue about that, but it will happen, and we're going to see another huge bull run in the metal sector and in mining stocks again, and it will be happening, I'm certain, within the next 2 to 5 years.
That's a very interesting point you make, that metals are not at that bad of prices relative to decades past. And I believe you're on record stating that silver is destined to hit 3-digit figures in the not too distant future. What kind of indicators are you looking at when you look at to where silver and gold can end up? I know it's an unknown, but certainly there's a range that everybody has in their head. So how do you come to that number?
Yeah, and I'm not telling people to go and bet on my prediction because but for me, look, I'm all in. I put a silver company together back in 2002 based on my thesis, and it hasn't. It's got close to proving itself right, but we did have things change on us. But that doesn't mean I'm wrong. I still contend that I am right, and it comes down to pure supply-demand fundamentals. Even though we don't have pure price discovery today in pricing of commodities or many things around the world, I think ultimately that the markets are perfect, and the markets do ultimately get driven by supply-demand fundamentals, and the supply-demand for silver is extremely good. We've been in deficit for multi-years now, and an interesting stat I like to look at is we had 5 billion ounces of silver countable on the Earth's planet back in the 80s, and these are 1,000-ounce commercial bars, and today, if you were to count up all the 1,000-ounce commercial bars, it's around 1 billion ounces, and so what happened to these 4 billion ounces in the last 30 years, and exactly where they've gone is in electronics and computers and windows and circuitry boards and filtration systems and hospital linens and paints and filtration systems and you name it, solar panels and medical instruments and so on and so forth. So at that rate of depletion, you can't tell me that we're not going to have a supply problem on silver. And mines are only producing about 800 million ounces a year, and the world's consuming over 1.1 billion ounces a year. Where's the silver coming from? And also another thing that Eric Sprott talks a lot about is the ratio, and I believe in ratios as well, just as much as he does. And we're currently trading at a 75-to-1 ratio, gold to silver. We mine 10-to-1. So for every 1 ounce of gold that's mined, 10 ounces of silver is mined. In the Earth's crust, there's a 15 or 16-to-1 ratio. So how do you have in the Earth's crust a 16-to-1, mining 10-to-1, and a trading ratio of 75-to-1? That's not going to last very long. And when that ratio starts to collapse, we got down to 39 in April 2011. It's currently at 75. I think it's going to go to 20 or 15 over the next few years. And when that happens, that's going to take us over to triple digits, in my view. That's my view, and no experts there to say this is going to happen for sure, but that's my investment thesis in silver.
Are you able to touch on the new project you're working on with First Mining Finance, or is that something that we would have to save for a later date to hear about?
No, I'd love to talk about First Mining Finance.
Go ahead. What can you tell us about it?
Yeah, no, I'd love to talk about First Mining Finance. It's my next little baby, and hoping one day it'll become my third billion-dollar success story. And I just mentioned about First Majestic's acquisitions. All took place in a very short period of time when no one wanted them. And First Mining Finance is looking at some pretty interesting assets right now, and we don't exactly know what we're going to be successful in acquiring, but over the next 12, 18, 24 months, we're going to be very aggressive acquiring assets that we think we can monetize over time and increase the value of the company as a result of these early acquisitions.
All right, well, Keith Neumeyer, everyone. Keith, thanks so much for coming on the program, sharing your insights. I hope we can get you back here soon, and I do hope that silver hits triple digits at some point in the next decade. That would be very, very exciting.
Well, hopefully it doesn't take as long as a decade, but I'll still be around.
Yeah, well, I've learned in the bear market to be conservative in my predictions now. It's quite humbling.
Yes, I know. Well, even saying it's triple digit when you're seeing $16 silver, it's almost hard to even imagine that it could happen. But I'll stick to my guns.
All right, thanks so much, Keith.
Okay, thanks, Nolan. Thanks for your time.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, troll, did you hear what's going on in Yemen, or are you too stupid?